Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm host Christine Lee. Happy Friday. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Luton, and Executive Director of Global Content, Emily Parker. Good morning, Emily and Lawrence.
Yeah, good morning. How are you?
Bit of a bloodbath in the markets today. Let's have a look right now. The CoinDesk Bitcoin price XBX index currently at $35,796. Bitcoin is down over 9% over the past 24 hours. The CoinDesk Ether price ETX index at 2679, also plummeting about just over 8%. The DFX CoinDesk DeFi index is also making losses of just over 10% over the past 24 hours, getting quite a beating right now. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk branch, which is globally as the leader in crypto news, events, and data. So, Lawrence, it's interesting because we did see a relief rally after Fed Chair Jerome Powell announced a 50 basis point rate hike. But now we're seeing the traditional markets really tank and the crypto markets follow suit.
Oh, and how? And it's probably going to get a little bit worse today because the jobs report came out. It was 428,000 new jobs were created. That's about 28,000 more jobs than expected. Yeah, that sounds like great news. Hey, everybody, the economy is roaring back, except it means they might raise interest rates or keep on schedule to raising interest rates over the next few months. And what that means is you basically have a stronger dollar, weaker assets elsewhere, including Bitcoin. And we saw Bitcoin drop down, in the 35s. It's down close to 10%. It's awful. It's ugly. Even LFG, Luna Foundation Guard, or whatever they bought $1.5 billion worth of Bitcoin. The darn thing went down to, keeps going down. So that's not even helping anymore. This might not be fun for a while.
All right. We're also seeing that the unemployment rate has pretty much stayed at 3.6%. Yep. Emily, what are you watching?
Yeah, I think everybody's watching, as you said, the bloodbath in the markets. Although this makes total sense narrative-wise, because the narrative is that higher interest rates are not good for risk assets like Bitcoin. So, we did see this brief rally after the Fed presser, and that didn't really make sense, right? So now we're kind of where we expect, which is that higher interest rates are not necessarily good risk assets like Bitcoin.
All right, let's dive further with our markets guest. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
As my kids would say, this is absolutely yucky. So joining us now to discuss the crypto markets is Marcus Sotiriou. He's market analyst at GlobalBlock. Welcome back, Marcus.
Hi, thanks very much for having me.
Great you're here. Unfortunately, it would have been nicer under better circumstances for a lot of people. But what do we have here now? This has just been ugly, as we were saying. It doesn't look like it's anything, pretty coming anytime soon. So let's step back a bit and just try to figure out why did the market sell off the way it did after that boost that we had right after the Fed presser, as Emily was pointing out.
I think one of the key things that led to the market sell-off yesterday was the drop in productivity, which I think would have scared a lot of investors. What this productivity report doesn't take into consideration was Omicron, which we had in January, where about, on average, investors might, or labour participants might have, spent 5 days less working. We had 62 working days in January. Throughout the last quarter. We also had significant supply chain issues in China, which could have definitely impacted productivity over here. As if we want to sell wholesale goods, they're stuck in China, so that would have definitely impacted the productivity report. The third thing is also CPI, because productivity is a measurement of cost and how that relates to how much work is being done. But if the cost is increasing, that's obviously going to affect productivity. And with CPI rising so high, this would have obviously affected productivity too. So I think all in all, these factors aren't fully taken into consideration by investors with the productivity report. but there was also a lot of cause for concern as retail traffic has now suffered its worst drop since November 2020. So this goes to show that the retail are spending less, which, it does raise more of a concern about the potential for recession later on down the year. We know we're 50% of the way there now in the US. And also you've got companies like Etsy and Wayfair deciding that, that they're not actually going to continue to raise prices. And some people might say, oh, that's great, they're becoming more competitive. Well, it's actually because they haven't got that pricing power, which allows them to raise prices, which suggests that the consumers are spending less. So I agree with what you were saying earlier. It could be a choppy ride for us over the next, 6 months or so.
So I kind of want to get, how does that translate to lower prices in things like Bitcoin, which is, effectively a hard asset, if you will. I mean, look at this and you're saying, okay, productivity's down, things are kind of lousy. You would expect everyone to say, okay, well, that means interest rates aren't going to rise as high as they did before. That means a weakening, or at least not as strong of a dollar as you would have expected. And so if that's the case, then something like Bitcoin, which would go up ideally in an inflationary environment, the price of Bitcoin should be going up. So how does something, it almost seems, granted, that all seems counterintuitive, the worse things are, the higher Bitcoin should be. But in this case, how does bad productivity translate to lower prices in things like Bitcoin?
Well, if the retail consumer is actually spending less, and it shows that they're weak, we've got lower growth, then the consumer actually has less capital to invest in markets in general. And crypto at the moment still being deemed as a risky asset. I think less capital is allocated towards assets like crypto. We obviously know it's very correlated to stocks, to equities at the moment. Both being categorized as, risk on assets. So that is how it correlates in the short term. It's important to note that even though it definitely is correlated to risk on assets in the short term, markets are forward looking. So if we do get a recession and we see significantly growth slow significantly, all this will mean is that the Fed will be forced to become less aggressive and have to potentially adjust their monetary policy so that Bitcoin, crypto will be able to actually rise again.
So how much lower do you expect the markets to get? How long will this bear market last? And what's the strategy going forward? Well,
even though I've just spoken about the macro headwinds at play at the moment, we've spoken, you guys have also spoken about them. We're approaching the low 30K part of the range now. So we're in this big range between 30,000 and 60,000. So at these prices, I think it's a great region for dollar cost averaging in terms of a long-term holder mindset. So if you're the type of person who looks in 5 to 10 years time frame, I think these are great prices to be dollar cost averaging. In addition, we've got significant bearish sentiment at the moment. I think that whilst we've seen this fear in the markets, as a long-term holder, this is where you want to be dollar cost averaging over the next 6 months or so.
All right. Marcus, thank you for your update. Appreciate your analysis. That was GlobalBlock market analyst Marcus Sotiriou. All right, coming up, other market downfalls we're seeing are the NFT market. So we'll talk more with Gary Vee and Ice Cube. That's next. Let's quickly check in with those markets right now. The CoinDesk Bitcoin price XBX index is at $35,796. Bitcoin is sliding about just over 9% over the past 24 hours. The CoinDesk Ether price ETX index at 2690. ETH also falling over 8%. And the DFX, CoinDesk's DeFi index, is plummeting over 10% for the day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Very pleased to bring you a CoinDesk exclusive. We have Gary Vaynerchuk buying 25 NFTs from Ice Cube's Big3 Basketball League. Joining us now to discuss this is Gary V, CEO of VFriends and VaynerMedia, and O'Shea Jackson Sr., better known as the rapper, actor, and filmmaker Ice Cube. Welcome, Gary.
I ain't heard this name in a while.
That's the name.
Wasn't sure what we should use, yeah.
Just call me
pleased
Cube.
to have you guys here. All right, cool. So let me just quickly try to summarize what's going on here, and you guys can correct me if I'm wrong. So Gary, you're buying 25 NFTs from the Big3 Basketball League, and if I understand this, I'm just trying to put this in the most simple terms. This is an idea of fractionalizing ownership of these sort of sports teams, right? Because the idea is that in the past, you would have like one owner kind of monopolizing ownership, and now it's a little bit more democratized, and individuals can buy NFTs and kind of own parts of these leagues. Ice Cube, is that correct? Did I sum that up correctly?
Definitely. You know, the NFT revolution is here, and you know, nobody has really been able to add the utilities to them to really make them kind of, you know, pop it and really, you know, embrace Web3. So, you know, we have a league that's great, 12 teams. The league owned all 12 teams, and to now be able to, you know, decentralize that and you know, bring in these great communities who can own these teams and also grow the league. And, you know, it's a new frontier, and we're glad to be in. You know, Gary, you know, he's been a great guy in helping us develop this in a lot of ways, as far as, you know, helping us just with advice on how to make it, you know, a new day for NFTs.
You know, I think
great. Okay, I'm glad we got.
Yeah, what I was going to say
Gary,
is that I think, no worries. The thing that I think is really interesting for everybody who's watching this show, and I'm a fan, and I know a lot of people in this community watch it, is we haven't started really taking advantage of what the blockchain really means. Right now, we're infatuated in NFT land on the collectability side with a hint of utility. But I think everybody who's really taking a step back and thinking about this technology overall recognizes over time the real impact of the consumer blockchain and NFTs will be utility with hints of collectability, and kind of a both game, because there'll be your Andy Warhols and your Jackson Pollocks and your Michael Jordan rookie cards. But you're also going to see incredible advancements of things that can be done. And this is not only fractionalizing ownership, which I'm thrilled to be a part of, and the Big3 is going to open up, but there's utility on top of it. You know, the tokens also create scenarios for courtside seats and the ability to talk about logos, access to our players. So, you know, obviously I've always loved sports. I'm always trying to learn and try new things. And Big3 from day one, when it first hit the scene several years ago, really caught my attention because I was infatuated with how passionate everybody was about the game, because we all loved the players that were playing, and maybe they were done in the NBA or overseas, but we still had so much affinity against the IP, as I like to call it, the equity of those players, that the entertainment value was very high. 3-on-3 is something a lot of us grew up playing. And I think for Big3 and other leagues and organizations, taking advantage of the technology that is now here reminds me a lot of 95, 6, 7, and 8, when companies and organizations finally said, wait a minute, maybe we should use the internet. I think we're starting to see the evolution of people saying, and organizations saying, maybe I should use the blockchain for what it is.
So, Gary, it's kind of an interesting moment to have you to talk about this because, over the past days, there's been some really negative press about NFTs, right? And the Wall Street Journal had a big article saying, NFT sales are flatlining. Is this the beginning of the end? And, there's been all this controversy with the Bored Apes. And, so people are kind of sort of getting the point of NFTs, at least some people. But I'd like to hear just from your perspective, just some real talk here about what are some of the problems, with NFTs? Where are the places that could be improved? And, are you, because you're clearly obviously still going all in on NFTs, but, there's definitely, we seem to be hitting a turning point, at least on sort of the media analysis of them.
Yeah, I mean, I was literally on this show 9 months ago saying that 98% of these things are going to zero. And when the market softens, there will be articles written that it was a fad, just like the internet. So, to me, it's kind of exactly what should happen when there's a gold rush. Last year, there was a gold rush. There was so much excitement. It was internet stock valuations, 1996, 7, 8, right? In 97, 98, 99, you had internet companies have 43, 49, $100 billion valuations back in 1999 and didn't have any revenue. We got too excited about the internet because we understood the macro, but in the micro, it wasn't there. Same thing now. To your point, we have a maturity now. People are starting to take a step back and say not every project is going to 10x. And so I think you have these ebbs and flows. Most people talk a good game that they're ready for the storm. They didn't spend money they can't afford to lose. But it's not true. We see that in housing markets. We see that on Wall Street. And we're going to see that in NFT land. And so I think this is the appropriate moment. I actually smiled cheek to cheek with the title that the Wall Street Journal wrote because it's literally exactly the 97 to 99. It's the April 2000 articles about the internet. See, we told you the internet was a fad. No. Consumers got way too crazy and the hysteria took prices too high. This is a correction and there's a more mature, thoughtful market on the back end. And that is just on the NFT market we have now that is completely based on collectability. I think what we're talking about here today on utility, what I'm trying to do in 2 weeks in Minnesota with VCon and what other things are happening, I think utility is going to start taking a forefront or at least an equal to the collectability and community part. And I think it's better days ahead. I think we also have to acknowledge there's a whole lot going on in the world, right? There's wars, there's inflation, there's a lot of factors that are playing into this, not just the recorrection of hysteria buying every project's going to the moon. And so it all makes perfect sense.
Gentlemen, of course, mazel tov on this big launch. But I got to ask, what exactly do you own in buying these NFTs? You have a league that currently owns 100% of all the teams. So now are you selling 49% up to 49% of each team, or is it more than 49%? Does it mean that somebody could come in and buy like a majority stake in a particular team just using NFTs, and who knows what they can do? How do you decide that? Because the NFL, let's say, and all these major leagues, they determine who owns who can buy and who can sell the teams. But is that going to be the case here? I mean, is the Big3 league going to determine who owns what and how much of a percentage they can own of the team?
Cube, you want to?
Well, right now we have. Go ahead, Gary. Go ahead. I'll let you hit it.
Cube, correct me if I'm wrong, but I think I've crossed these T's and I's through the last couple of weeks with my legal team. Individuals are going to be able to get up to 40% of the teams, and they are able to only transact financially on sale of team. So to your point, my friend, the Big3 league still has a lot of that control. They have the majority, plus you're not P&L profiting each year. You're profiting as whatever ownership you own of the team on transaction of the team. So obviously, when you think about that, people walking into that scenario need to understand what controls and non-controls they have. For me, I think I've been very on the record for the last 20 years. My professional goal is to own the New York Jets one day. And so as you can imagine, much like I did with the pickle, well, because I want to win a Super Bowl and I'm miserable. And so I feel like if I'm in control, I might be able to do that. For me, the Triplets is the team that I'm going to be buying into. I want to learn. So for me, this is much like the pickleball team that I bought recently. I want to keep getting experience And so for me, that's the value prop above and beyond the fact that I really believe in the league. And on a transaction, I think there's a business opportunity for me. Obviously, every single NFT is going to have different layers of responsibility, ownership. I'm going to have a whole chunk of 40% with my team. Obviously, other teams are going to be fractionalized more than that. So I think, whether it's access to being able to have access to players or courtside seats or logos or the things that you want to impact on the team, this is, I would call it more operational, more COO life than CEO life on the way they fractionalized it. That's how I saw it, but it still worked for my situation. Cube, anything I missed?
No, I think you hit it right on the head. This is really for people who want to be involved in sports, on the next level. It's voting rights, tickets, merchandise. It's for people that really, really want to have their voice heard and, get treated pretty good when you come to the games. And so, it's really the ultimate, sports fan, situation, put it that way. So, it's amazing to have, Gary Vee and a couple other communities to actually buy whole teams and to really be, able to grow this league through the activities in their communities. It's just a new day. We're happy.
So, Cube, you had, you started this new league a while ago, and it's still going. Now you have these kind of alternative leagues happening in other sports as well. The most prominent right now being the USFL, and there was USFL generations ago. It feels like that tried the same thing and essentially compete with the NFL. So, what kind of advice would you give them? I mean, we're seeing, we had the WNBA, we have the USFL. What advice would you give them, and what do you think they're doing right now, and what do you think that they could do better?
I think the key is not to compete, to be a complementary league. I think, I believe the USFL is working with the NFL, which is great. We would like to work close with the NBA. But the key is, with the Big Three, we found our niche in the summer when it's not, a lot of competitive hoops going on in the summer. We felt like that was our sweet spot. And, we approached this kind of like UFC approach boxing. We want to create our own sport and our own niche and not compete, but be complementary. And I think that's the key.
Mm-hmm. Yeah, and I think to your point, as somebody who grew up a huge USFL fan back in the 80s, I loved the New Jersey Generals. There are so few leagues that have made it this many years, right? That was no question a big thing for me. Like from day one, when Big3 hit, I was like, wow, they have a product people actually want. And I think the history of the World Football League, the XFL, the USFL, like it's really hard to find product market fit. That's just the name of the game in business. And they clearly have it with the Big3. And I think that is disproportionately the thing that's most interesting to me. Look, I think every company on earth is going to have an NFT blockchain strategy, just like every company on earth has a website and social media strategy. I think this is not a campaign. This is a technology infrastructure. In 7 years, every company will have an NFT strategy, whether it's for their club card, marketing, leveling degrees, right? To me, yes, this is cool that they decided to fractionalize, but this is about the Big3 being a product people care about.
Cool. I just wanted to pivot on news items for a sec, but Cube, I saw that you had tweeted earlier, free at last, Elon Musk, take off my shadow ban, homie. And I know, in the past, you tweeted out some tweets that have been controversial to some, offensive even to some folks. So I wonder, I imagine you have some thoughts on Elon Musk buying Twitter.
Well, I'm anti-censorship. I'm a freedom of speech guy. I've always been my whole career. We've been fighting freedom of speech, from, starting with NWA in the late 80s and early 90s. So, anybody who is down for freedom of speech, I'm down with them. And so, I believe Elon's going to, open up Twitter and make sure that, people's voices are heard. Sometimes the voices you might not like, but, that's the whole thing about freedom of speech. You have to really be open to opinions you don't like. So, I'm all for it. I hope he does the right thing. And anybody who's battling censorship is a friend of mine.
Right. So I guess you're saying that all tweets should be treated the same, so to speak. And I think some of the tweets that you had said were, I guess, anti-vaccine. Some were criticized as being anti-Semitic. Are your thoughts that there's misinformation out there as well? Should it all be treated the same? And I guess Gary, on that front, were you ever offended by any of these tweets?
Well, I've never tweeted anything anti-vaccine. Sometimes pictures are subjective. And, it's really, when it comes to tweets and channels and anything that you don't like, you can obviously, turn the page and scroll down. You don't have to be involved with anything you don't want to be involved in. So, we all grown. And if you don't like something, you just keep moving on.
Well, I guess what I mean, some of them were criticized as being anti-Semitic. And I guess, Gary, on your front, were you ever offended by any of these things? And do you think free speech should be, or all tweets should be treated the same?
So to answer directly, no, I wasn't offended. You may know, or people watching may know, I was born in the USSR and literally was able to come to America through political asylum for being Jewish. But no, I wasn't. Look, I think these are complicated measures that everyone's trying to figure out. I'm a believer that freedom of speech matters. I'm very empathetic to why people worry about misinformation. I think that misinformation is happening all over the world, both on mainstream media, social networks. The internet is a conversation we have very little about around information. So I think we get fixated on it because it's very important, and information is how the world kind of navigates. And so, I think that most people have become so incredibly red and blue, and it's really unfortunate. And I think in general, the energy that we need to be thinking about quite a bit is this game of purple. I mean, people have completely dug in, and really, if you look at the history of the free world and the world in generally, when we start pushing as this far apart, we get into very dangerous places. So for me, in the face of controversial topics and issues and complex matters that humans have been trying to figure out for centuries, I try to deploy a lot of compassion and empathy. I also think the biggest mistake we've made in society is the inability to try to figure out intent. We've become incredibly literal and are trying to create scenarios that fit the narrative of how we see the world. And for some reason, we as humans have decided to completely lock in, to completely dismiss intent. Watching people get macro and, more importantly, micro canceled every hour on the hour on social media, where it was clear to the most common sense human being that the intent wasn't there, is a really major topic that needs to go into self-accountability, modern day parenting, and a lot more pointing thumbs at each other, at ourselves, instead of what we've done now, which is mass societal finger pointing. That's kind of how I see it.
Well, definitely can't do stand-up anymore without somebody attacking you. I mean, but anyway, Q, getting back to sort of how you ended up into crypto. I mean, how'd you go from NWA to NFT, or is it now NFTWA? How did this whole process start? Like, who cornered you at a party and made you suffer through their whole pitch of like, here's what I want to tell you about Bitcoin and crypto, and how'd you get into it? Like, what happened there?
I mean, just being a creative person, I'm always looking for new ways to create. Of course, seeing a lot of artists get into NFTs was very interesting to me. When I got into it, I looked to work with the best. I did a drop with Trevor Jones. I did a drop with Silly Gabe. And we worked months to make sure that those were great projects. So I'm always looking to work with the best. We're very fortunate that Gary V sees the world like we do when it comes to utilities and where the NFT space is going, and to be first, on that frontier with us. So the thing is when you get into a new space, you got to respect the space and respect the people who've made the space, and that's what we've done. And I think we're going to have a great drop tomorrow and Sunday. And, I think we're going to show the world really how to do the future of NFTs when it comes to the Big3 and working with all these great communities.
Cube, as you know, basically every celebrity has an NFT now, or they're just kind of all over the place. But we've had a bunch of hip hop artists on the show, and it seems like there's kind of a special relationship between hip hop specifically and NFTs. At least that's what people have said. And I'm curious, if you could talk about that for a second. Do you think it has a specific, any kind of special significance in the hip hop community, or just what it might mean for the future of that industry specifically?
Well, I think it's a new frontier when it comes to hip hop artists. We're kind of always looking for, the new wave or the new craze or what's really going to be the future of, it's not just art, they're starting to do music with NFTs. People are seeing all kind of concepts. Now, going through the studio system our whole career to see the blockchain technology where the people decide whether a project is gonna, be created or not is just very exciting to me. And I'm pretty sure a lot of hip hop artists who went through, record companies and studios and the process, and to be able to break away from that and to be directly with the fans. And you guys, come up with a project and enough fans want it to exist, you can make it happen through the NFT blockchain. So I just think it's really about getting in, understanding the world, and then just taking it to new heights.
Awesome. Cube, I just have one more last question as well. I saw that you're joining the Doge army, and I'm just wondering what kind of inspired you or drew you to the world of Doge.
Well, we just got Bill Lee to purchase a team for the Dogecoin army. And, it's great. We're connecting with a lot of great communities. We're connecting with the D Gods, Kraus House, few people that's coming in to be a part of this. And, the top of them all is Gary V. So, I think we got a great crew of people who are looking to blow this league up, who have great ideas, and
awesome.
We're just excited to be involved and to have something that's hot and people want to be a part of.
Yeah, I'm excited for you guys. Gary, congratulations on joining the Big3. And Cube, congratulations on continued success. Appreciate you guys coming on the show.
Cheers. Love you, Cube. Talk to you later. See you. Bye, everyone.
All right, take it easy.
I love
All right,
you guys
that was
too.
award-winning rocker and Big3 founder Ice Cube and VeeFriends creator and CEO Gary Vaynerchuk. Coming up, a report on the state of staking with decentralized liquid staking platform ClayStack.
Hi, I'm Michael Casey, Chief Content Officer and co-host of Money Reimagined. You're watching CoinDesk TV.
Our next guest says proof of stake, often praised for being a more environmentally friendly way of processing crypto transactions, is the future of blockchain. And staking, which lets crypto holders put their digital assets to work by earning passive income without selling them, is a growing trend. Joining us now is Mohak Agarwal, CEO of ClayStack, a decentralized liquid staking platform. Hello there, Mohak. Thank you for joining us. So you have this report out on the state of staking. First of all, though, could you break down for us what staking is?
Yeah, thanks for having me. Yeah, sure. So in the proof of stake blockchains, what happens is that in order to secure the network, every user has to stake their assets to the validators who are responsible for validating the transactions on the network. In proof of work blockchain, you call them miners. In proof of stake, you call them validators. So to understand the behavior better from the users, we conducted a survey from 999 users to understand what do they like, what are their preferences, what do they don't like. Yeah.
All right. So then you made this report. Could you tell us about some of your key findings?
Sure. Yeah. So, personally, I've been running like validator nodes for 4 years. But even for me, the findings from this report was like kind of mind-boggling. One of the key finding was that 37% of the people said that if they were given a chance, they will not stake again. And the reason that I believe to do regarding that is that in the early days of proof of stake, what happened was people did not have any other use cases apart from staking. So they were very comfortable in staking their asset because these tokens did not have any use case. But as DeFi happened, people did not want to lock up their assets for a mere 5 to 7% or even 10 to 12% yield when DeFi is offering much higher yields. That was like one of the reasons that now people have been looking at alternative yield strategies. And for proof of stake blockchains to be secure, it's very, very important that the overall staking percentage on the network is very high, because the lower the staking percentage on the network, the higher is the attack vector on any chain. And in the report, we saw that people mentioned like various reasons due to which they don't want to stake their asset again. One was that the returns were not very meaningful. The gas is too expensive. Staking is too complicated. They want to be able to sell their assets when the price move. Imagine staking an asset, earning 9% yield for a year, and the asset price goes down by 50%. So people want freedom, and that's where what we do at ClayStack is we are giving that liquidity to people, that freedom to people, that you come in, you stake your tokens, you can sell whenever you want, you can participate in DeFi to earn additional yields.
So I think what's cool about your report is that you do go through like some of the bad things about staking or the obstacles to staking. Because for a while in the crypto world, staking was kind of portrayed as this magical solution to like all the problems. But speaking of which, we have Ethereum eventually moving towards a staking model. And this, again, there's a really, really high hopes around this, a lot of anticipation. What are you anticipating? I mean, do you think this will go smoothly, or do you think they're going to run into some of the problems that you outlined in your report?
I am very positive about Ethereum moving towards proof of stake. There's a lot of active engagement from the community. There's a lot of excitement amongst Ethereum holders as well for this merge. But it's gonna be like step by step. So in the first merge that's gonna happen, the unstaking will not be enabled. So right now, if you stake your Ethereum, and that is unique only to Ethereum, in majority of the proof of stake chains, if you stake your token, you can unstake them, and then there is an unbonding period that once you unstake, you can get these assets back in 30 days, 90 days, 1 year, whatever. But on Ethereum, whatever you're staking right now, until the date is announced for the merge, unstaking is not there yet. So whatever you are staking, it's just like staked. But a lot of people are very excited because after the merge, the staking yield is expected to be as high as like 15% or 10 to 15%. So that's creating a lot of participation amongst investors. But one thing that a lot of users are not talking much about is that on Ethereum, what happens is whenever you stake, there is a limit that maximum Ethereum that can be staked in a day.
And there will definitely be a limit towards how much you can unstake in a given day. And if after the merge, a lot of people want to unstake their Ethereum, the queue for that unstaking will be like too long.
So in your report, you kind of go into the demographics of who's staking. What were the major findings in that, and does it tell you anything about how this business, if you will, it has grown or is developing and the direction it's taking?
I think in the early days of proof of stake, we were seeing a lot more like individual operators who wanted to operate a node. But from the report, we can see that only 14% people now said that they want to set up their own validator node. The challenges of running a validator node, they need a stable internet connection, they need very strong infrastructure, they need a 24/7 monitoring, and they need a team on standby for disaster management. And then the worst of it is that the barrier to entry for majority of the proof of stake chains is becoming higher and higher, meaning that the validators who already have a decent amount of stake, they're just like becoming bigger and bigger. But any new individual validator or a smaller validator who wants to enter the ecosystem is not being able to come. And that brings the problem of stake centralization. So at ClayStack, our aim is to be able to stake assets across multiple validators out there so that we also overcome the problem of stake centralization.
Awesome. All right. Well, the full report, State of Staking, available with ClayStack. Mohak, thanks so much for joining us. Have a great weekend.
Thank you.
That was ClayStack CEO, Mohak Agarwal. All right, let's check in quickly with crypto Twitter for a tweet of the day. This one is from Anand Daguerre, or Prithvi, tweeting, "This has been my experience. Normie hears about NFT, calls me because I crypto. I explain the technology takes hours. They buy whatever dumb stuff is being promoted on their favorite brainwashing technology platform. Weeks later, they call and I explain illiquid markets. I have a feeling some folks will have a lot of explaining to do in these rough markets ahead." All right, that's it for First Mover. Emily, Lawrence, have yourselves a great weekend.
Yeah, I'll try.
I'm your host, Christy Lee. Meantime, check out The Hash at noon Eastern and All About Bitcoin at 3. You're watching CoinDesk TV. Also, next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
While the crypto market has fallen into the red, NFTs are back in the game. Welcome to the Daily Forecast, May 6th, 2022. I'm Megha Chadha of Forecast, covering all things blockchain. Crypto prices followed the broader market down overnight, but things are looking much brighter in the NFT space, with the sales back on the rise. We'll take a look at that plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with a market update, where the bounce in the wake of the Fed's rate hike proved very short-lived. Thursday saw the worst performance for the Nasdaq Composite since June 2020, with the index closing down almost 5%. And the crypto market swiftly followed, losing over 7% of its total capitalization in the 24 hours to Friday morning in Asia. Most major tokens also fell, wiping out any gains they made yesterday, with Bitcoin down around 8%. It was trading at around $36,500 Friday morning in Asia. Meanwhile, US 10-year yields, a metric which is often inversely correlated to the broader markets, rose to 3.035%, the highest mark since 2018. Bitcoin has become strongly correlated with traditional markets in recent months, as more traditional funds have connected to digital assets. Meanwhile, the US Securities and Exchange Commission, or SEC, has placed 88 Chinese companies on its pre-delisting list. Among them is mining rig maker Canaan. It's on the list as the SEC has determined that it used an auditor whose working paper cannot be fully inspected by the Public Company Accounting Oversight Board, or PCAOB. Canaan has until May 25th to dispute being added to the list, And the company made a statement yesterday saying it will continue to comply with applicable laws and regulations in both China and the United States and strive to maintain its Nasdaq listing. The PCAOB is seeking access to the audit working papers of New York-listed companies which are stored in China. However, China has rejected such requests on national security grounds. Reuters reported in April that both countries are discussing an audit agreement to avoid the delisting, with Beijing hoping to sign a deal within the year. The US Holding Foreign Companies Accountable Act stipulates that a company put on such a list by the SEC for 3 consecutive years may face delisting. You can find those stories and more at Focus.news. Over in the NFT space, after a sluggish couple of months, the NFT bear market has finally come to an end as monthly sales volumes grew by 48% in April over March. Focus Lachlan Keller has more.
NFT sales in April hit $3.6 billion US. That's more than $600 million higher than in February, despite being recorded across nearly 15% fewer buyers than that month. Yehuda Petcher of NFT data aggregator CryptoSlam told Forecast that the market is maturing and investors are being more selective about what they purchase, so they're probably transacting less frequently but in much bigger ETH amounts. According to the Chainalysis State of Web3 report preview, as of May 1st, investors have already sent $37 billion US to NFT marketplaces this year. That puts them on pace to beat 2021's total of $40 billion US. The report also showed that NFT trading is truly a global phenomenon, with no single geographical region recording more than 30% of all NFT marketplace web traffic since the beginning of the year. March's NFT market dip coincided with a short-lived revival of the crypto market when the market cap grew steadily to reach a 2-month high of over $2 trillion US. And now NFT sales are up while the crypto market is down, a narrative that the NFT market is inversely correlated with the crypto market has arisen. However, Pesce says that while crypto moves along with the stock markets, NFTs are riding their own wave. He says that NFT cycles seem to move around major NFT news and not much more, and that over time, as NFTs become more mainstream, they will probably fall into more typical patterns. Looking ahead, Pesce says he's looking forward to more play-to-earn experiences, like the other side from Yuga Labs, coming from all corners of the metaverse. He believes it could be an exciting year to come. For Forecast, I'm Lachlan Keller.
And finally, Hong Kong's love of NFT artwork seems to know no bounds, with no fewer than 3 exhibitions underway all at once. Forecast Danny Park went to take a look.
NFTs are popping up everywhere around Hong Kong, on buildings, billboards, and trams. And here at the K11 malls in Tsim Sha Tsui, 3 major NFT events are being held simultaneously. We see big names from the world of finance, crypto, and the art scene, such as Visa, HSBC, and AAX riding on the NFT wave big time. One of Hong Kong's most visited luxury shopping malls, K11 Musea, is currently studded with over 200 NFT artworks by 30 different artists across 9 floors. The noteworthy lineup includes NFT collectibles that have already a huge following, such as the Bored Apes, renowned artists such as Joan Cornella that have turned their art into NFTs, and local Hong Kong artists such as the 8-year-old Arthis Ng to the French girl who sees massive opportunities ahead.
Then going to the more creative part of it, of course, NFTs, the digital world, digital arts, and the metaverses will offer a lot more opportunities to be creative. You don't have the same laws of physics, right? So your artwork could be flying or could be flipping, of course, could be moving, could be giant size, could be underwater. There's no limit to creativity.
At the same time, in a nearby branch of K11 shopping mall, global crypto exchange AAX is displaying their NFT collection in a pop-up called Apes, Pixels, and Gods.
We all, human beings, we started as apes, starting from clay. And then as we actually interact with technology, in this case pixels, we do have the potential to become as if we were gods. And what that means is, we're able to expand our capabilities, we're able to expand our skills, to have more knowledge, have a more profound experience of the world in a kind of interconnected way. But on top of that, there's another question, which is, if that's true, that we are able to create our world through technology, it comes with a great responsibility as well. And so this pop-up is also about questioning, where do we who do we ascribe power to? Who do we give that voice? And that's the question of kind of the crypto gods, I guess.
Just a minute's walk away from AAX's display stands an exhibition of Japan's leading NFT artists that cover fashion, installation art, and more, emphasizing that NFTs add value because they leave a digital footprint of an artwork's history.
For us, NFT is just a certificate. It's a registry, right? To record the ownership, the history of an work. So that's why we're trying to showcase to the audience in Hong Kong that NFT is not just about pixel art. It could also use to be as a utility that to prove the ownership, the authenticity, and also the provenance on a physical art, just like the land registry.
NFTs have already become a force of nature in opening new channels for expression and appreciation for both artists and viewers. But where does the future lie? And are they worth parting with some cash for?
I really have no idea if 20 years from now, CryptoPunks are anything interesting or whether they're a solid investment product. I don't know. I really don't know. Nobody knows. The small picture is actually NFTs, the technology around it allows us to pinpoint a unique asset to a particular address and just pinpoint it there and keep it there. And that idea of something not being replicable in terms of ownership, that in itself is the innovation.
And while some remain skeptical over the real value of NFT artworks, it has to be remembered that many new technologies or art forms were viewed in a similar light when they first emerged.
I think the first time NFTs came on my radar was with CryptoKitties. I thought it was absolutely ridiculous. But I'm a kind of sound money guy, right? So I'm really strong on the Bitcoin narrative. And I thought to myself, this is very frivolous. What are people doing? But at the same time, we do have to understand that this is also how people experiment with technology. And so I'm open-minded generally to, I know when Bitcoin first came out, people were very skeptical. And actually, there was no response at all. People were not interested. And let's say a few years later, it's all about, this is a scam, Ponzi scheme. So you can expect that as NFTs grow, there's still going to be a lot of questions around it. Same for me as a private individual.
I guess there's no telling whether your digital art will maintain its worth a decade later. But the invaluable core technology may remain. For Forecast, I'm Danny Park in Hong Kong.
And that's the Daily Forecast. And now if you want a deeper dive on these stories, the Daily Forecast is now also a newsletter and is delivered straight to your inbox. Sign up at forecast.news/newsletter. Thanks for watching. I'm Forecast Megha Chadha. Until next time.